Hi, everyone. Thank you for taking out time on a Sunday morning to hear me out. And thank you so much to the Bank of Baroda and the Sahamati team. 2,500 founders on a monthly basis. So I thought it would be good for us to share some of our learnings and what we're seeing in the ecosystem with you folks, and see, in whatever way it helps the larger ecosystem. So I'll break this session down into probably two bits. One is why is this India's golden decade? And how does it matter to all of us? And second is why digital public goods or digital public infrastructure is a key pillar to make India's golden decade a reality and a big success. So with that, let me actually very quickly share some material which we can use to have a more structured conversation. But if there are any questions you have, if there is something that you want more clarification or more insights on, please feel free to reach out to me, on LinkedIn, on Twitter, and we can have a more detailed conversation around some of it. So I'll actually quickly start with very quickly, what is Antler and what we are doing, just so what we are doing here in India. So Antler is one of the world's fastest growing venture capital funds. We are now there across 25 offices across the world. Antler is a combination of 15 plus funds that are actively investing across geographies, primarily in the pre-seed stage. We now have a global portfolio of about 600 companies, 200 plus people working on and in Antler with our founders for the success of our founders. And we're supported by 600 plus advisors, really top of the class across all major locations in the world. The portfolio has people from 80 plus nationalities. So that's how diverse the portfolio is. And at least 30% of them have at least one women co-founder. This is a number that we want to improve significantly. But I think just to start with, also, it's a great number at this point in time, but obviously that's no benchmark for success. We want to significantly improve this going ahead. In terms of some of the countries that we are present in, India is one of the newest, but one of the fastest growing locations within Antler. We have a very strong presence in Southeast Asia, Australia. We also have a strong presence in US, Canada, South America, Africa, China, Japan, South Korea, so on and so forth, right? So, and we are expanding a lot more as we speak. So what do we do, right? What is Antler? Antler is the day zero investor. We work with founders to co-create companies. I would say, we can very easily break down Antler and our focus into three broad categories. Number one is a ready team. So if you have a team, you have an idea, and you are just starting to build your dream company, that is where Antler comes in. We do not need a product. We even invest pre-product. So that's where we come in. We invest in the company, work with you, to grow the company in India and globally. The second bucket is for an individual or a group of two people who are looking to start up, may or may not have an idea, and are looking for a second or a third person to join the co-founding team and build the company with them. This is where we run something called the Antler India residency, and there is a similar program across all other locations of Antler. But this is where we run something called an Antler India residency, where you can find it's a cohort of 60 to 70 people, the top 1 percentile in the country who are looking to start up, and you can find a potential co-founder there in a structured manner, iterate with them, work with them, validate or invalidate your idea, your hypothesis, and ultimately start your company. And that is where we also invest equity capital into select companies. So that's the second bucket. And the third bucket is college students. We really want to go as early as we can, and we really want to build the ecosystem from ground up, which is where we run something called the Antler India Fellowship. This, as of now, is India only, but there's a major push globally to take this product to every Antler location that we are present in. But through the college student program, we work with student entrepreneurs and give them a grant, equity-free grant, and work with them in a structured way of the Antler India Fellowship. We had a coverage of 700 plus colleges in India alone. And from cities where even I had not expected when we started, I had not expected we would be able to cover some of those cities. So that's the level of impact that's being created. Now, why are we talking about this, and why is Antler doing all of this, especially in this time period, right? People continuously, very regularly ask me this question. what is happening in the macro environment? Are you funding startups? Is there enough capital available? Is this a good time to start up? Despite all the negativity around you, I think this is the best time for founders in a decade. I don't think there was a time in the last decade which is better than this. I also don't think in the last decade which is better than this. I also don't think uh, there would be a right time going forward. Now is the time, and this is really the best time for founders in a decade. And it's not just me saying this out of the blue, right? If you look at the top Fortune 500 companies, 1 out of 3 of them was actually started in a recession. If you look at, let's say, some of the most well-known companies globally, right? Airbnb, Stripe, Slack, Uber, Pinterest, and there are n number of such companies. All of them actually started during a recession or immediately after a recession. Now, why does this happen, right? Why do we say that now is the right time to actually build a company? We say that because now is the time when your real risk appetite comes to the forefront, right? Your real passion, your real intuition, your real conviction on building something actually comes out, because this is a time when there is so much negativity around you that only the best of the best and only the ones who are really very highly convinced about what they want to build are the ones who are building it. And which is where some of the major successes historically have come during these time periods. People also ask me, if we are actively investing, have we slowed down? Coincidentally, we've actually ramped up our investment pace. We made 3x the number of investments in the last 2.5 months than we did in the remaining, calendar year. So we actually slowed down our pace in Jan, Feb, March, when the market was bonkers. Everybody was investing at crazy high valuations. That's when we actually slowed down. And as the market started to move in towards a recession, we actually started ramping up our speed of investment. So we've actually deployed more, and we will continue to deploy more capital at this point in time. So this is really the best time for founders in a decade. If you are someone who's thinking of starting up, please do not worry too much about the macro environment. If what you're building, if you're really convinced about what you're building, take the jump. There's no right time, and you'll never be able to take a rational decision. So take the jump, and we would love to talk to you if you are one of them. Now coming to India's golden decade. So whatever Antler is doing in India, and because it is a great time, this also creates the opportunity for India's golden decade, right? So if you see, it started with the US. US became the largest country in the world about 3 decades back. And that's when it was the Industrial Revolution. Then China came in. When China came in, that decade went to China with all of their manufacturing prowess. This decade we think is belongs to India, and there are a lot of structural reasons why we think this decade belongs to India, and we'll talk a lot more about it. But I think the great Indian dream is to become the world's third largest economy by the end of this decade. And if you see our trajectory, it has been promising, and it has been in the direction that we would like it to be. We were the 11th largest economy in the world a decade ago. As of date, we are the 5th largest economy. So that's a major jump in just a decade. And we expect to be the 4th largest economy by 2027. And hopefully by the end of this decade, if not, and hopefully earlier, if not by the end of this decade, we would like to be the 3rd largest economy in the world after the US and China. And you would feel that we jumped 6 steps here, but we are only going 2 steps here. The delta to be covered here is massive, and the competition here is also significantly high, because you're competing with very large economies like China and the US. And I'm sure there would be some time when we would also leave them behind. But at least for this decade, I think this decade belongs to India, and this is our opportunity to actually build it from India for the world, and to actually dream the great Indian dream, right? And some quick stats on how it will impact, or what it will lead to. The GDP per capita, if we become India, the world's 3rd largest economy, the GDP per capita goes up to about $5,000, which essentially means that the whole economy is now in the middle income bucket. Today, we are in the below middle income, middle class bucket. This brings us to a middle class bucket. Now imagine $5,000 GDP per capita, and for the size of our population, we become really powerful. And the consumption story then really becomes real, right? People have money to spend, people have money to consume products. So that is one major shift. As a share of total world exports, we are expected to double our share. Obviously, it's still 5% is still something that we can improve on significantly, but this is 5% of overall world exports, which I think is a very large market uh, in itself. Some other important numbers are, let's say, the energy demand, right? The energy demand is expected to almost double, which essentially means, and we'll talk a lot more about it in the energy transition bit, there's going to be a 60 to 70% increase in the consumption of energy, but we do not produce energy at this point in time, right? Which is where the share of renewable energy is expected to go up. So anyone thinking of building anything in the renewable energy space, there's a massive market, there's a massive opportunity that can be tapped here. We expect the share of renewable energy to double, in this time period. And the other major change that we expect is credit to GDP. Today, credit to GDP is somewhere around 57%. We expect it to go up to 100%, and we'll also talk about it. And India Stat has a very important role to play in increasing this credit to GDP ratio. Now, I'll not go through all of the numbers, but what are some of the levers to kind of achieve, the great Indian dream? How do we really become the world's third largest economy from the world's fifth largest economy today? Broadly, I would say, there are n number of factors, but in my opinion, the three most important factors are here. India becoming the office and the factory of the world. What this essentially means is office is the services bit. Success of companies like Infosys, TCS already prove India's success in becoming the office of the world. We just have to really replicate that success over and over again across many more industries. So can India become the services hub of the world? And factory of the world is essentially manufacturing, somewhat similar to what China did. But can we really become the factory of the world? And recent regulatory changes, and there's a major government focus on India being the factory of the world. And with the right policy, with the right push, with the right capital available, I don't think achieving this dream is far. It should be pretty easy. And so services and manufacturing hub of the world. Can we do all of it from India for the world? And what does this require? This essentially requires a lot more public-private partnership. We should not expect that the government should do everything. We should not also expect that we or the private sector should do everything without help from the government. So the public-private partnership then becomes very important. Second bit is FDI. This is where investors like ourselves play some role, but really making India more financially friendly, improving the ease of doing business can help bring in more FDI, and obviously also ramping up domestic investments. This is what we've been doing a lot. We've ramped up our own investments. A lot of it is domestic capital. Can the public sector spend a lot more? Can companies in India spend a lot more, invest a lot more, and take this to the reality, right? So with the three key pillars of public-private partnership, FDI, and domestic investments, I think India becoming the office and the factory of the world should be very easily achievable. Second important thing is energy transition. We spoke about this partly earlier, but we expect a 60% increase in per capita energy consumption. Now, what does this mean? India today is not producing a lot of the energy it consumes, right? So a lot of it is important. Can we move this to, can we increase the share of renewable energy and consume more renewable energy, which will eventually reduce, India's reliance on energy imports? Plus, it creates a need for multi-billion dollars in energy capex, which is going to be FDI plus domestic investments. So can we create that flywheel, move towards more renewable energy so that more investments can come into the market, use alternate energy solutions like electric vehicles, hydrogen fuels, and n number of other such solutions, to satisfy India's energy demand, really making it Atmanirbhar. Today we are not, unfortunately. So some of this can really improve our position as an economy and really help us get to this target of being the third largest in this by the end of this decade. And finally, and this is what we are going to spend most time on today, is digital dominance. This is India's chance, and India has the mindset, India has the technical skill set, and India has the risk appetite and the capital available to create digital dominance for ourselves. And India Stack is going to play a very important role here. India Stack is an example of how India can build digital dominance here in India and take it to the world. Very similar to what we did with UPI. The UPI is a solution. A solution like UPI does not exist anywhere across the world. The ease of payments here in India today is unmatched, unparalleled, and a lot of countries outside India are actually trying to take UPI out of India and take UPI to their own countries. That is how powerful UPI is, and that is how powerful we've already started to create our own digital dominance. Can we replicate the success of UPI with a lot more other things? And that is what India Stack is all about. The core principles of India Stack, these are transaction-led businesses, low cost but high volume, and small ticket size systems. And there are some key themes, and we'll talk a bit more in detail about it later. But can we make it interoperable? Is it decentralized? And is it a public utility? And here public utility means it can be executed at population scale. We don't want, we cannot create digital dominance by only servicing a small percentage of the population. We can only create digital dominance by executing things at population scale and then taking it global. So those are some of the themes of the India Stack, and we'll talk a lot more in detail about it. But why is India Stack the answer, right? And a lot of you are actually building in this hackathon, building on the Account Aggregator framework. So you would know a lot about the India Stack already, and I'm sure you're already convinced about the power of the India Stack. I'm not here to convince you, because I know that you're already kind of convinced, but I'll tell you a few things about what we've seen in the market and why we think this is going to be really powerful, and this is really going to be the answer for our digital dominance. We've already laid the foundations and we've already proven scale. If you look at, like, say, our digital penetration, India already today is the world's second largest smartphone market. I would take a pause and I would let you consume and digest this fact that we are already the world's second largest smartphone market. That is how fast we are consuming, digital products. That is how fast our consumption of digital content and everything digital is increasing, right? And we expect to have 1 billion plus smartphone users by 2026. That is the reason why every large, smartphone manufacturer is now looking at India as an important market. Smartphone is a large share of, the total sales or the total volumes sold on, like, say, the largest e-commerce platforms in India. Imagine a country with a $1 billion plus, with a 1 billion plus smartphone users. That is how powerful, and that is the scale at which we are going to consume everything digitally, right? And we've already proven it with Aadhaar. Aadhaar is the world's largest unique digital identity platform, and Aadhaar already solves a lot for us. You don't have to carry an ID card every time with you everywhere, right? And this is really unique. Nobody in the world has been able to do something like this. There are economies like the US which have social security and similar use cases, but a very different execution. I know a more traditional execution. A clear example of this is, like, say, the OCEN platform, where we through which we run our COVID vaccination program. All of us, I don't think any of us would be carrying our COVID vaccination certificates on paper, right? Hard copies. I'm pretty confident all of you, and including me, is only using soft copies. The scale at which we did it, all of it digital, all of the end-to-end process were digital. No country in the world, including the US, could do it. For the longest time, most countries, even today, some countries are using, really pen and paper, really doing it offline. We had zero offline element to it. That is, you should again take a minute and just digest the fact that we've already proven our digital dominance. It's really a matter of just replicating the success over and over again with multiple more use cases. And last but not the least, all of us know this, the power of UPI. India's digital payment penetration is just 31% today. So what this means is, of all the payments that are being done in India, digital payments is only 31%. But even at 31%, we are already 2.5x of China and 6 times of the US. That is how large We already are at just 1/3 coverage. Imagine if we are able to just double the coverage. We don't need to get to 100%. Even if we are able to double coverage to, let's say, 60%, imagine the scale at which we are operating, right? UPI today is the world's largest digital payments infrastructure, doing rupees 130 plus trillion INR, every year. This is 60% of India's GDP in velocity terms, and 60% only UPI. That is how big and powerful the UPI is. And now what we are trying to do, we are trying to take the benefits of all of this and replicate it, and replicate it across multiple utilities. And I'll talk a bit more about it. And executing it at population scale. We've already proven that we can execute it at scale. We've already proven digital dominance. Now it is really about how can I create multiple more utilities and just replicate the success of a UPI, of an Aadhaar, across multiple use cases, right? And some of those use cases are, say, the account aggregator framework, which we are talking about here, which is really the data and the consent layer. Then there is ABDM, which is health stack, ONDC, which is for commerce, OCEN for credit, and there are a lot more. Vani, there's Digital Sky, and a lot more, right? And I'm sure there's a lot in the works also that has not been announced so far. So imagine if we are able to do this, we're already the largest unique identity platform. We're already the largest digital payment infrastructure. Can we be the largest data and consent layer? Can we be the largest health stack, commerce, credit? There's nothing that is going to remain, right? And all of this can be built in India, executed at at population scale in India, and then just taken globally. Imagine how powerful India and India's digital products can become at global scale. And that is what excites us the most when it comes to the India stack. Some of the key themes, we've already kind of touched upon this earlier, but India stack is non-excludable. No one can be prevented from consuming this good. We cannot put in an artificial barrier, and that is the power of an India stack. What this means is, irrespective of your income bracket, irrespective of your gender, irrespective of your age, nobody can be prevented from consuming the India stack. For example, UPI. Nobody can be prevented from consuming a UPI today. Anybody can, irrespective of their income, irrespective of the geographical presence, irrespective of which bank they have an account in, right? So, which essentially means that there is no one central authority controlling everything and excluding people, right? And really, the success of this can only be successful with 100% inclusion. You do not want to exclude people. That is only when it will actually become really powerful. Second is an interoperable design. This is where, how can I make the user data, how can I make my APIs and my systems interoperable across use cases? A classic example of this, I'll actually take the example of UPI first because relatability will be higher, and then give you a classic example of account aggregator. Account aggregator really works on the principles of interoperable design, but let me take a step back and explain what I mean with the example of UPI. Irrespective of the bank you hold an account in, I may be on HDFC Bank, you may be on Kotak Mahindra, somebody else may be on Axis Bank, so on and so forth, right? All of us can be on different banks and still transfer money from one to other without any friction. That is what makes UPI interoperable. Number one example, right? Number two example is, I may be using a Paytm UPI, somebody else may be using a Google Pay UPI, and a third person may be using a PhonePe UPI, for example. From a Paytm UPI, I can transfer money to a Google Pay UPI account also, again interoperable. So again, the common thing across both is remove all of the barriers and ensure highest possible usage as much as possible, right? Because if you create those artificial barriers, acceptance is going to face a bottleneck, and acceptance is going to be slow, right? And because we are, we all of us are really interested in the account aggregator framework and are spending so much time on the account aggregator framework. Account aggregator is actually a classic example of interoperability at scale. What account aggregator does, and we'll again talk in more detail in subsequently, but what account aggregator is essentially doing is that account aggregators collate all of the data from various data sources, which is again making it interoperable. You can consume data from multiple data sources, and you can also give this data or send this data out to multiple sources or multiple use cases. So for example, an account aggregator consent manager can help you give consent to a insurance product, for a credit product, for a pension product, for an investment product, and the list continues, right? So you as a customer don't have to do anything. You just have to give access, irrespective of the product, irrespective of the source of data. Your data is usable by everybody. That is what we mean by building interoperable designs. Moving on, non-rivalrous. What this means is that the consumption of this good by one person does not reduce the quantity available to the others. For example, today, if I am consuming fuels, right? If I am buying petrol, the total availability of it is reducing, which is why at some point in time, because I am consuming it today, someone would be deprived of the usage of that petrol, right? India stack ensures that it is non-rivalrous. So irrespective of how much I consume and at what frequency I consume, it is not going to impact your consumption. That is another important theme or a layer or a design principle around India stack. And finally, decentralization. A small number of large players today to a large number of small players. So if you look at the ecosystem around you today, and again, we'll talk a bit more in detail about it. We started with pipelines, moved to platforms where there were a small number of large players dominating the market, controlling the market in some way. The objective is to shift power to a large number of small users so that dominance can be curtailed, right? There is no one authority, or there are no two people who can control the whole market, right? There are n number of people who are now getting a share of the win and are together running the business in some way. So those are some of the key themes that we think are really important and really core to building the India stack. A deep dive into the account aggregator framework. I'm sure I don't have to explain this to all of you because you're building things on this. But for anybody else who would have logged in very quickly, an account aggregator is an RBI regulated entity. So you can only be an account aggregator with an NBFC AA license. AA is the account aggregator license. The objective is to help individuals securely and digitally access and share information from one institution to the other. And I'll come to the mechanics of it. But the key things for you to remember is helps an individual securely and digitally access and share information. So in a digital format and in a secured manner, either access information or share your information with somebody else. That is what the account aggregator is trying to do. Let's take an example of what we mean, right? Say there is someone called a Varun who's collecting information, or who has one bank account, say in HDFC, another bank account, say in State Bank of India. He has a mutual fund or demat accounts with Zerodha, Grow, so on and so forth. He also has a pension fund with LIC. He also has a life insurance. And all of us have multiple assets, right? Financial assets more prominently. But there are times when there is no one single repository. Unless I'm diligent enough to print all of that and keep it in a file somewhere in a safe manner, we don't have this in one place. It's always scattered. So every time if any of you would have gone to a bank to take a loan, they would have asked you for 10 documents, and I'm sure that would have been the most painful part of the entire process for you, because you just don't know where the documents are. Some documents may not be updated, some documents may have been lapsed. It just creates a very big problem, right? That is the problem that account aggregator is trying to solve. Can I bring all of it together digitally so that you can access it from wherever you are in the tap of a button and in a very easy, secured manner, right? So all of this information comes into the account aggregator. And this information, so there are two parties here. One is the FIPs. FIP is financial information provider. These are people who provide financial information. For example, banks, in Varun's case, an HDFC and an SBI bank. Mutual fund houses or demat accounts, in Varun's case, a Zerodha or a Grow. Tax authorities, data around tax filing. Insurance provider, in Varun's case, an LIC. All of these people provide information to the account aggregator framework. And Varun can give consent to the account aggregator framework to pass on information to financial information users, people who use this financial information to give you products. For example, robo-advisors. For example, wealth managers, cash flow-based credit, personal finance management, right? So these are the two parties where there is one set of people. And by the way, sometimes it may also be interchangeable, where, like, say, an HDFC Bank is a provider of information in Varun's case. Maybe in my case, HDFC Bank is actually a user of information. If I'm taking a loan from an HDFC Bank or a credit card from an HDFC Bank, or, like, say, I'm investing something in an HDFC Bank, they might actually be the user of this information. So it is interchangeable. But primarily, financial information users are people who consume the information to give you specific products. And financial information providers are people who you already have a relationship with, have some data with, and they're providing that information to the account aggregator framework. And all of this crisscrossing of information happens through a consent layer. Without one's consent, you will not be able to share anything. That is what makes it a secure framework. What are some of the use cases? Things around insurance, things around credit, and I'll again talk a lot more in detail about it in the next slide. But things around insurance, credit, wealth management, personal finance, pension, and a lot more. There are n number of use cases of an account aggregator framework. I would say the way you should imagine this is, everywhere some kind of a data is required, account aggregator can be involved and solve for it. Everywhere data is required. And in today's digital world, and as digital penetration continues to increase over time, the extent of data consumption and the extent of data generation is only going to increase. So the power of account aggregator in itself is only going to increase just by normal math, because digital penetration is increasing, right? So those are some use cases. We'll talk a bit more in detail about some of them subsequently. But why we think the account aggregator is revolutionary. Number one, it aims to make data sharing an easy and hassle-free process. Like I said, we are already consuming the internet a lot, but even today, we have just scratched the surface. As we increase our consumption of the internet, and as we increase consuming products and services digitally, the volume of data that we generate is going to increase, and the digital consumption of that data is also going to increase, right? Account aggregator makes this data sharing very easy and hassle-free, so that you as a user do not have to go to 10 touch points, figure out 10 documents, collate all of it, figure out what are the mistakes in all of it, and then do something, right? You can just, with account aggregator, you can do it just at a click of a button. Second is, this unlocks multiple use cases which may not have existed if something like an account aggregator did not exist. For example, MSME lending. MSME lending is something that India has been talking about a lot. And if you remember, we had earlier spoken about increasing the credit to GDP ratio from 57% currently to 100%. One important catalyst for us to get to that 100% is lending to MSMEs, and MSMEs really are the backbone of the country. If we are not able to give them enough money to invest in the business, I don't think we can grow to a $5 trillion or a $7 trillion economy. I don't think that would be possible without MSME lending. But the biggest challenge with MSME lending today is that there is no data, or there is no data is not available. And in cases where data is available, it is not shareable in a secured and a simple manner, which is what makes underwriting to MSMEs difficult. And hence, if any of you have dealt with MSMEs or know MSMEs, their borrowing cost is actually higher, because underwriting them is harder because data is not available. With account aggregator, data will be available. Sharing that data will be easy. Accessing it would be secure and easier, right? Which essentially means that underwriting MSMEs would be easier, which essentially means that cost of credit for them would be lower. And that is how you can grow that flywheel. So today, it may not exist, but once account aggregator becomes prominent and becomes a solid framework, that's when MSME lending, there are massive use cases around MSME lending that can be unlocked because of the account aggregator framework. The third is, we've already spoken, a single interoperable platform for all use cases. It doesn't matter whether we are talking about insurance, credit, wealth management, personal finance, pension, or any other thing. All of it is interoperable. You just use one platform to do all of it. Fourth, I think, one key pillar is data security through end-to-end encryption. There are some risks still there, and we'll talk about some of the challenges. There are some risks, open questions, but as the network becomes more and more powerful, as we spend a lot more time and technology bandwidth to develop the network, I think data security is going to be a key differentiator. It's going to be an important strength of the account aggregator framework and not really a weakness or a challenge. And finally, and obviously it's a long list. I've only picked up the top five and added it here, but it's a long list of why account aggregator is revolutionary. But the final fifth, reason why we think account aggregator is revolutionary is that this is a neutral party between FIPs and FIUs, which essentially means that which increases the security of your data, which essentially reduces the bias or reduces control again. If it was not a neutral intermediary, one of the two guys would have been controlling all of this data. Today, because it's a neutral intermediary, there is no one party controlling all of this data. It is an independent, it serves as an independent auditor in some way, right? So an independent party who you can grant access to or consume data from. Now we've discussed, some of the good things about the account aggregator framework, but everything new comes with its own challenges. Some of the open questions around the account aggregator framework as of now, and a lot of it is actually being solved for as we speak. But monetization of account aggregators is an important open question. Is there enough money to be made? How much of money can be made? What is going to be a key differentiator? Some of those questions are still open for us as investors. I'm pretty sure there's a lot of work that is happening behind the scenes. We are involved in some of those discussions. And I'm pretty confident that this is something that will be solved over time. But as of now, this is an important open question in the minds of people. Second is the scaling up may actually not be as rapid as UPI. It may take some time for it to onboard new customers. It would be slow and gradual, but I do strongly believe that beyond, like, it will initially be slow and gradual, but at a certain tipping point, it will then be rapid, like UPI, right? And UPI also kind of had a similar trajectory earlier. When earlier it was pretty slow, went on, as a straight line, and then one fine day suddenly there was a spike. Something similar may happen with account aggregator framework, but I just expect it to take slightly longer as compared to UPI because there are more complexities probably involved here. UPI also had one base layer, of the payment infrastructure already built, already existing. So UPI was built on top of it. Here, there is a lot of groundwork also to be done in some way. So that is why we think this is one open question. Unlocking multiple use cases may also take some time, and you would have seen if you've been tracking the growth of account aggregator framework, it has been one use case at a time, because unlocking some other use cases requires some technical development, also requires a lot of business development. So unlocking multiple use cases may take some time. And then high frequency usage is yet to be unlocked. UPI is very high frequency. All of us make pay for something all throughout the day, right? Every if there is a food that we are eating, if there is something we are purchasing, if there is a cab that we are taking, we are continuously paying for something, right? And we pay for something every day like every hour probably, right? Account aggregator is not that high frequency a use case. Account aggregator, like, I don't take credit every day. I don't buy an insurance every day. I don't manage my wealth every day. Or I don't get a pension every day, right? So the frequency is comparatively lower, but there can be certain high frequency use cases built on the account aggregator framework. And again, there is a lot of work happening in the background on this. And I'm pretty sure it will be unlocked, but I don't think it will ever be, probably as high frequency as a UPI, because it is a very different product and it's actually not a right approach to compare both of them. Both are not apples to apples. But it is something that is an open question, yet to be seen how it works out. And like I just spoken about it earlier, there are some open questions around data security and data ownership, though we think that data security over time will actually be a key differentiator and not a risk. We expect that this will eventually move here and not remain here in the long term. I think this is what, this is where we as investors have the opportunity to look at a larger pool of people building various things, look at all of the innovation happening on ground, and then take a view on, hey, I think this is what is going to be important. The intent here is just to share some of my learning, some of my views on, where is the next big opportunity in the account aggregator ecosystem. This is by no means a laundry list. There are n number of other great opportunities. If you are building something, which is not here, please reach out to us. We would like to have a conversation and understand. This is just a smaller list of some high potential opportunities that we think. This is also evolving as we speak. So this is by no means full blown list. This is really just a small curated list of some select opportunities that we think are interesting. Now, if any of you are building anything in this or anything outside this which you think is interesting, and we would love to talk, we would love to spend more time. We are also happy to spend time and give you some feedback around this. So please reach out to us through our website or LinkedIn or email, anything that works the easiest for you. But one big opportunity is around the data analytics layer, especially for financial information users. Can we build analytics and insight tools to build insights on the customer data? So what this means, I'll explain what this means, right? Say if I am someone who's if I am like, say, an insurance company, or if I'm like a robo advisor, right? Account aggregator today gives me access to a lot of data, right? But me as an FIU may not know what to do with that data or how to understand that data. Access to the data is very different from understanding and synthesizing that data, right? Account aggregator is solving for the access. Can we build companies that solve for the understanding, the synthesizing bit of it, and read that data and give me insights so that I can use those insights and build better products? That is what data analytics is, and those are solutions that we think are going to become a lot more prominent. We also expect a lot more such layers to come out in the market, where they are just tools which read all of consumers' data and provide insights on top of it and help financial advisors and lenders make sense of the data that is available. There are already some very interesting companies doing data analytics and insight services, especially on the lending side, where they are reading all of that data and giving you some insights. You can feed in benchmarks that, hey, this is a threshold, give me only the data that crosses this threshold. So there are people who are already doing it, but I expect a lot more sophisticated solutions can come out in the market over time as account aggregator becomes a lot more powerful. Second is credit. And honestly, credit, insurance, and wealth management and personal finance here, the overall logic is very similar. Can we create products that today do not exist? And can we personalize products in a way that we today cannot? In credit, an example would be, we've already spoken about it, so I'll not repeat the same thing. But in credit, can we lend to MSMEs? Can we lend to underserved retail customers? And they are underserved only because of a lack of data available. If data was available, everybody would want to lend to them. But today, there is no data available, and hence a lot of high quality retail customers do not have access to credit. So can we give them that access through the account aggregator framework? So that is one use case on the credit bit. Insurance bit, I'll give you an example of what is happening today, right? Me as a person, so like, say, for example, if I am driving a car, and if one of my friends, or if you are driving a car, if the car is the same, if the age of the car is the same, we pay the same premium. However, I may be a riskier driver as compared to you, in which case I should actually be paying a higher premium, because the risk for the insurance company in my case is higher, right? I'm not saying that is actually not a reality, but that's just an example where, like, say, if I'm a riskier driver, I should actually pay more. And if you are not that riskier driver, you should not pay equal to me. You should actually pay lesser than me. That is not happening today, because I'm not able to customize insurance, because I don't have a lot of that data available. Part of it will be solved by hardware, things like telematics, so on and so forth, which we are already working on. But a lot of it can be solved by just giving you access to the data. Things around, like, say, a life insurance, right? It's not necessary, like, it's stupid for you to have the same premium for every person in that age bracket. It's really stupid for you to have that, right? But unfortunately, nobody can do anything about it, because there is just no data available for me to differentiate between, like, say, two individuals who I don't know, right? With the account aggregator framework, as data is more easily available and accessible, I think this is going to be a future reality, where we can offer more personalized policies and premiums versus standardized as of now. When it comes to wealth management and personal finance, better tracking of investments across various platforms. This is already happening, by the way. A lot of platforms, some of our investee companies are also doing this now, where you as a customer can track all of your investments in one platform. Account Aggregator obviously makes it possible. And second is, can we offer better advisory, more customized, more personalized advisory based on this data? We've already spoken about it, so I'll not repeat, the obvious here. Then there is API designs. Account Aggregator essentially is a set of APIs, right? You're just the FIUs are pushing in data through APIs. FIPs are pushing in data through APIs. FIUs are consuming that data through APIs. You are giving consent through APIs. So all of it is just APIs, right? Some codes, some lines of code, some pipes that are being built digitally that is managing all of this data. There can be companies that build these APIs. Setu is one of them. Setu try to do some of this where you are standardizing API design, development, publishing, maintenance, monitoring. So for a customer, it is just a plugin. You can just plug and play and start using the account aggregator framework without you having to build all of it yourself. And that is what makes consumer side usage or B2B usage much more prominent and faster to scale, right? So we do expect companies to come in this bucket. Then there is data storage and security. This is a really important use case, really, really important. Given the volume of data that account aggregator is going to hold, security of that data and storing that data is going to be very important. And we expect, companies would create secure databases. There would be cybersecurity companies who are working only to ensure security of your data, on the account aggregator framework. So those are some interesting use cases. And then, last but not the least, unified interoperable customer services. For example, unified nominee registry. Today, you have to register a nominee across very different platforms for all your products. So if, like, say, if I have 3 mutual funds from 3 different mutual fund houses, I have to register nominees separately. If I hold some gold, there is no way for me to register a nominee except for writing a will. If I have some life insurance, I have to go to that life insurance company to register a nominee. So all of that experience is also broken. Account aggregator, there could be interoperable customer services providers sitting on top of account aggregator framework, who just enable me to put in the nominee once, and all of it will be replicated all across, right? That ensures, in the unfortunate event, people know about all of your assets, people know about all of what you're leaving behind, and people know who's the beneficiary of what. So it makes life much simpler. So these are some of the interesting opportunities in the account aggregator ecosystem. By no means, again, this is by no means, a list of all of the opportunities that we believe in. This is a smaller curated list. If any of you are building anything here or outside in the account aggregator ecosystem or on the India stack, we would love to hear from you. You can write to us. You can go on our website or come to any of our LinkedIn's, my LinkedIn, and write to me, and we will definitely want to have a conversation with you. So I'll spend some time talking about this, and this is really the last slide. And if you remember, I'd spoken about this earlier. Is there's a big global shift in the way businesses are created today, or in the way business is being done. Historically, we started with something called pipelines. We were building pipelines, big companies building global supply chains, working on mass consumption, mass production. One example of this was the Ford Motor Company, and if you look at any traditional company, would fall into the pipeline bucket. So even in India, right? If you look at, like, say, Reliance Industries, if you look at Tata Sons, if you look at any of the large Indian companies, all of them have global supply chain, in some cases monopolized supply chain. All of them are working on mass production. All of them are working on mass consumption. What happens as a result of this is that there is only one winner. The barriers to entry into these markets is so high. Today, if you want to start a Reliance Industries, it is very difficult because the barrier to entry is very high. So essentially, there is only one winner in case of pipelines. Then there was a shift towards platforms. And this shift happened because of reduction in search cost, reduction in bargaining cost. Platforms is where, there was global digital connectivity. Digital was first, digital made the shift from pipelines to platforms possible. Consumption was more personalized, production was more distributed. But the problem here is winner takes all. So multiple people can exist, can grow up, but eventually there would be one winner who will take everything. The classic example of platforms are like say Facebook and Apple. And Apple, I'm not talking about the company, the manufacturing company Apple. I'm talking about the software Apple. If you look at an iOS is really a platform. Apple, the manufacturing of it can still be considered as a pipeline. But that manufacturing bit, I would say, is Foxconn and so on, right? So Foxconn, etc., who are handling manufacturing for Apple would be in the pipeline bucket. But Apple in itself is really a platform with iOS. But the classic examples of this is like say Google, Facebook. All of it is like say people on Facebook, right? There is global digital connectivity. I can connect with anyone across anywhere in the world. My consumption is personalized. The kind of content I see on Facebook is very different from what somebody else sees. And the production is also distributed. So Facebook is not generating all of the content. People on Facebook, customers on Facebook, users on Facebook are producing that content, right? So it is also distributed. But the problem is there is no second Facebook. There is only one Facebook. So that is where winner takes all of it. Now is when there is a shift from platforms to protocols. And this is where winners share all, right? This happened because of reduction in verification or policing costs, in coordination costs. This is where there is global execution, there is interoperable identity, and there is distributed ownership. This is the really decentralized model. What this means, and again, I'll take the example of like say an ONDC. ONDC is a protocol. What that means is the ownership of ONDC is distributed across multiple stakeholders: buyer app, seller app, ancillaries, logistics, payments, blah, 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 right? There is no one owner. Like say an Amazon was here, you don't have an Amazon here. And Amazon is broken down into 5 players or 10 players here, right? Which creates that distributed ownership. Interoperable identity, we already spoke about this with Account Aggregator. It's not necessary for there is no one solution for one use case. There is one solution for all use cases. That is what makes it interoperable. And then there is global contract execution, can be executed at a global scale, right? That is what creates protocols, and this is where we are. And the big theme here is that winners will share all. What this means is you remove the monopoly that existed here, you ease off the barrier to entry that existed here, and create a market where people can thrive, multiple more people can thrive, and the winner shares everything. The biggest question that we've had internally, and we've debated a lot about this, and only time will say how this eventually evolves, is what does it mean as an outcome for venture capital investors? Venture capital investors look for large outcomes. Now, if there is no one large winner, who do we bet on? Should we earlier, if we were looking for, like say, companies becoming unicorns, should we now take a view that we want 10 $100 million companies versus one $1 billion company? Is that the view? That is something that we are still yet to figure out. It's still an open question. But in principle, we do agree with the logic here that you should remove the monopoly, you should remove the barrier to entry, makes it a winner shares all market. That is what is going to create more success for everyone, and also increase the odds of success in some way. Here, the odds of success were lower. Here, entering in itself was so difficult. Here, you can give people the opportunity to enter and become very successful. That's it from my end. I think this was a great chat. I know this was more one way, so if you have any question, feel free to write to me. I'm more than happy to take some questions, answers offline. If you have any questions, you can also post it on the YouTube comment section, and we'll surely get back to you. But for whoever is here till now, thank you so much for being there all throughout, listening to me patiently. I hope this helps you to build your own mental framework around the account aggregator and the digital public goods infrastructure. And for all of the ones who are participating in the hackathon and have registered for the hackathon, all the best. We would love to surely meet some of you, if not all of you, and see if we, as Antler, can help and build something together. With that, thank you so much, and have a great Sunday, everyone. Thank you.